across. We have Anurag Singh, managing partner at Ansett Capital, to give us a perspective on the global setup today, and obviously how he views India will also be crucial. Great having you here, Anurag. Let me first start off by asking you what the impact or the ripple effect of some of these measures with regard to peace across the world could well be. Hi, this is Harsh. Good morning. Good evening where you are at. But give us your sense. What could the ripple effect be? How are you playing it? What kind of assets are you looking at this point?
Harsh, good morning. By the way, I think we are interacting for the first time on air, so big hi to you. And for a moment, I had to rub my eyes as to what channel am I on, right? But it's a good site. So yeah, look, Harsh, I think it's a everything rally, right? So take Bitcoin, take gold, take stocks. Pretty much everything is rallying, right, across the world. So I think it's not surprising because look at all the central banks, Bank of England, Bank of Japan, Bank of European Union, and of course the Federal Reserve. They are all trying to reduce rates for the next couple of years, right? So as they say, don't fight the Fed. If the rates go down, then eventually assets will inflate. So I think that's kind of the setup, right? At least for the next 1 or 2 years. In terms of the peace deal, I think we were, and some of us, out here in US, we were pretty positive when President Trump assumed charge that some of these global wars will eventually come to an end. And I think that's what we see, we can't be anything but happy about this outcome, right? I hope this lasts, and I am also sure that reasonably sure that even the other wars will also more or less come to an end. And that's a good world, right? So everybody is happy. Harsh?
Yeah. Anurag, don't rub your eyes. We're all still here. You're very much on ET now.
I know. I know.
Right.
Yeah.
But so Anurag, for the Indian investor, and I'm just plucking India out because literally
Yeah.
we've been an island of our own, right? Completely unperturbed by all that's been happening in the
Yes.
globe. Very
Yeah.
range-bound market. Earnings season kicks off now. You've got the GST base, the consumption fillip
Mm.
coming up, the festive season. What should the Indian investor be doing?
No, so Indian investor has to stay the course. Look, we were in an island even before, even in 2022, when the world took a correction of 25%, Indian markets were still up by, I think, 2%, right? So broadly, and 23 and 24 were a whole different story, although US went through a significant correction even that time, right? So the point is, I think we know the story. Indian market, the capital can't flow outside, so domestic flows have to stay within the country, which is fine. It works positively most of the years. Eventually, my sense is the returns from the market, investors will only have to settle down the expectations at around 10% broader level, and if you make some effort, then maybe 12%. As long as that is well set, there's no disappointment, right? These years would come in where the markets take a time correction, but the story is intact. The only point is story is nominal, is growing at a 9% nominal GDP growth. And so markets could give you 10 to 12%. That's about it, right? But otherwise, Indian investors don't need to worry. Having said this, I've always been of the opinion that we should have now a 70-30 portfolio in India, which is 70% equity and 30% in debt, especially more in these times when there's mostly time correction underway and nothing much seems to be happening. And these are not mouth-watering levels, right? So there are no bargains at least at this point. It's very well discovered market, Aisha, I would say.
Okay. Anurag, talk to us a bit about how you're viewing the alternative assets, gold, silver, and the like. Some of those ratios have obviously come back to slightly more saner levels, if I can call it. But talk to us about where you see gold going in this world, and how should one tie it up with US equities and maybe US debt as well? How do you view that entire picture?
Yeah, that brings also to your question about asset allocation. So, look, Harsh, I think I'll give a simplistic view. Um, I understand how to value stocks and I understand how to value the bonds. I have no way of telling you how to value a gold or a Bitcoin, right? It's the beauty lies in the eyes of the beholder. We all understand, the mistake that US did by blocking Russian assets of 300 billion. And that really kick-started this rally from the emerging market central banks to buy gold, right? But ultimately, now where would it go? Well, I don't know if 20% of the new supply is being cornered by the central banks, that the price will eventually go up, right? But having said this, I am of the very firm belief gold is not an asset which the Western world believes in, and an asset which is believed only by the emerging markets can go up for a while, but it doesn't have too much legs to stand on beyond a point, right? Because US and European Union, both of them do not want the gold to be an alternative asset. So it can do some song and dance for a while, but I don't think that's and who is to guess what is the value of that, right? So we are people of equity and bonds, and let's just kind of stick to that. That's kind of my view. It's more simplistic, right? But that's how I tend to see that.
Right. Anurag, always good to have you on the show. Thanks for your time and insight as always.
Thank you. Appreciate it.